do you think that there will be a pullback in metals before they go up? I would argue the same thing with real estate. Do you think there will be a crash in real estate before it goes up? And I'd say abso-freaking-lutely.
Yes.
Because the only way that real estate prices are going to come down is for prices to come down, for the market to crash. And there's not enough demand. So to your point, or even the ability to buy, you have record numbers of houses for sale. For the first time ever, new houses are costing less than the houses that are already in construct or that are already existing, because no one is willing to sell their houses when they're locked into the low rates. And this illusionary price that they have isn't reality in when rates rise to where this is the problem with Mother Nature. And Mother Nature in this case is the interest rate. You mess with it that way, you get all of these distortions. These distortions are playing out right here in front of you. So you have a whole bunch of older baby boomers with these houses. They're not selling right now because they're not getting what they want. And even if they did, the people can't afford them. So what do? It has to fall to meet demand. So, and then maybe once the system is cleansed of all of this, all of this nonsense that's happened, maybe we see prices go up. But I would be leery of real estate as an investment right now. Sure, there's always good real estate, but in general, I would be leery of it. The people trying to flip houses and stuff, very dangerous in this environment. It's not what it was in 2019, 2020, whatever, with 3% 30-year mortgages and them throwing money at everyone.
Yeah.
It's not that environment anymore. Yeah, Saudi Arabia took a massive position in SLV. And it's too bad that they bought it in SLV and not the real thing. But the one part that I took away was that the purchase was large enough whereby they could demand physical delivery. This is a privilege that retail investors lack. We cannot take possession of SLV. You have to have a massive position in it in order, I think they call it a basket, in order to take physical possession, which is a big deal. But it's a bigger pattern, Jared, of central banks and sovereign wealth funds like India, like China, like Russia, who have publicly said we are accumulating silver either under the pretense of industrial applications, or in the case of Russia, from a strategic stockpile standpoint, which is very unusual. The rumors are, India's bought, 800-900 million ounces in the last 5-6 years. China, as we've talked about ad nauseum, flies around the world buying doré and concentrate from South America and Latin America and Mexico, pulling it out of the ground, as Vince Lansing says, even before it's called silver. And now you see Saudi Arabia doing it. Well, and let's not forget, Saudi Arabia was one of the 5 charter members, not the original developers, but the 5th member, the next one to sign on to the M-Bridge. They have been admitted into BRICS. They haven't fully done it. They have applied to the Shanghai Cooperation Organization. This is a country where they're now building a vault from the Shanghai Metals Exchange in Saudi Arabia. This is a country that by its actions are de-dollarizing and moving away from Western influence. And it's funny, I used to always say with Rick Rule, less than 0.5% of the public owns gold. And I would say from Joe and Jane's six-pack up to the Harvard Endowment Fund. Well, lo and behold, the Harvard Endowment Fund just bought $101.5 million worth of gold the other day. So you have big money, whether it be sovereign wealth funds, the Saudi Arabian government, the Harvard Endowment Fund, David Bateman, a billionaire, who just came out and bought, I don't know how much he bought. I don't know if it was $1 billion worth or hundreds of millions, but he bought a whole bunch of silver, took possession of it. He came out with a tweet that I found it was interesting. He said, if just 10% of the world's gold buying shifts to silver, it will eat up every single ounce that is mined every year. And I saw Jake's Custom Part, who I love, Jake, in there say that Vince Lansing said 80% of the gold that was purchased was not reported to the IMF. Well, I completely agree with that. So I would think that the $100 billion that we think has come into COMEX is probably a whole hell of a lot more that's coming in and through other channels, directly into JP Morgan vaults or through proxy banks or whatever, sovereign wealth funds or through the Exchange Stabilization Fund run by the Treasury Department under the auspice of national security. There is a race globally right now for the possession of commodities, and it doesn't make sense why anyone thinks that the IMF should be told all of it. It only weakens your position if they really knew how much you valued it and how much you were accumulating it. And quite frankly, after what the IMF or the BIS pulled against the BRICS with Enbridge at the 12th hour, the IMF and the BIS are Western institutions. I wouldn't tell them either. So I think that this is something that is happening and accelerating. And I think it will get to the point where it will start to dramatically affect prices. They don't want it to move up straight up because it prohibits them from accumulating as much as they would like, but gets to a point where if one of these short positions breaks rank and tries to cover one of these big short positions, which you could argue that they are starting to cover. They've covered a lot with the commercial banks recently, but if one breaks ranks and says, I'm out of this game, it's too dangerous, it's an existential threat, the whole thing goes pear-shaped. Manipulations always end badly, and you can only manipulate a market for an overextended period of time by pushing it in the direction that it is going. But when the whole world is pushing back against your manipulation, you run the risk of being run over. And I think that's something that needs to be certainly understood by these banks, and I'm sure some of them do. So, yeah, I don't know, man. I think we are on the cusp of some large appreciations price-wise in gold and silver, whether it be through revaluation or whether it be through something that happens in the economy. You know, we talk about the contrarian indicators. Right now, you have the largest percentage of retail owners in stocks in the history of the stock market. That's mom and pop. This is more than the '08 financial crisis, more than the dot-com bubble. The largest ever. About 54% of all equities owned are by the retail public. Never been that high. At the same time, the retail public has the largest exposure to options, which is speculation, and the largest ever margin exposure, $1 trillion. That's leverage. So the retail is all in on stocks, on leverage, and speculating with options. This is as risky as it gets, as levered as it gets, as speculative as it gets. And since the beginning of the year, the institutionals are selling 2 to 4 billion a week in stocks. You got 7-to-1 sales by insiders versus buying. You have Bezos, who sold 6 billion in Amazon since June 1st. The three largest shareholders and bond members of NVIDIA dumping shares, Jamie Dimon dumping shares, Zuckerberg dumping shares. They're all dumping shares. So at the same time, you have the public wouldn't know a gold eagle if it fell on their foot, and you have the largest deliveries in the history of the COMEX market. We become net importers of gold. And as Vince says, 80% of the gold purchases aren't being reported. I'm telling you, the paper price is being used by the elite as cover to reposition. And it hasn't translated down here yet. It will. Something will happen that will wake people up. And like that, it disappears. Because the dealers like myself, now business is certainly better than it was prior to 2019, but it is not like it was during the pandemic. You have a lot of big buyers that are buying larger amounts, but not the everyday person buying. So premiums have been very low as a result, and the dealers aren't seeing the turnover. Like the money velocity is very low, so too is the turnover in inventory. So dealers bargain sell their products. Like, I'll give you an example. If I can sell you an American Gold Eagle backdate for $90 over spot, but the brand new 2025s, the mint cost right now would be roughly $3,500. So I can sell you 2024 Gold Eagle for less than I can buy, making nothing a 2025. So you get all these primary distributors who are obligated to buy them, and they're choking on shit, plus paying more for the brand new stuff than everyone's selling last year's stuff for. So in other words, what I'm getting at is that there hasn't been, now I'm the opposite of this, right? I tell my office, go out on margin or on our line of credit, and anything that people want to sell, buy it at these stupid prices. I bought $11 million worth of junk silver at 55 cents back a spot. Really? How the hell does that happen? Don't know, but they sold it to me if I took it all. So this is going on. The premiums are so stupid that there's values everywhere. Now, why would I tell them to do this? Because the biggest money in the world is standing for delivery at a level no one has ever seen. This will be the precursor. The big money is always miles ahead of you and me. Always. During COVID, when everyone was freaking out, I went and bought everything I could, everything, and went deep into debt to do it. And I'll do it again because I see things changing, right? I hedge it all, so I'm not exposed to the metal price and the premiums. What premiums? I am not exposed. I'll buy as much as I possibly can, so when it does change, and it will, every other dealer is going to, just like that, be sold out of product. And they're not going to get any more because everything comes, most of it, from across the Atlantic. Yeah, you got the US and the Canadian Mint and a handful of refineries here, but that's it. Mexico doesn't sell anything. And so you talk about all the other avenues for metals, the London Metals Exchange, stuff comes out of Zurich. You got the mint in the UK and Austria and Australia, South Africa. None of that stuff's going to come over here quickly if the shit really hits the fan. And so I think what is an opportunity right now, it's a contrarian indicator. Once again, the most well-informed money in the world is standing for delivery in 100-ounce and kilo gold bars and 1,000-ounce silver bars, yet the public here, which has zero exposure to precious metals, the biggest money in the world, is all in and taking delivery here to a level no one's ever seen. It's the opposite in the equity market. They're all leaving as the public's rushing in on margin and leverage. So, what could possibly go wrong? I would just simply say, the reason most people don't succeed in investing is that they don't have the courage to do what I'm doing right now. I'm not saying it's smart. Maybe it's stupidity. But I'm going out and buying everything I possibly can for my business right now at stupid prices. Because the biggest money in the world is showing me that these people don't do this kind of shit for nothing. And this is why you don't hear a word of it by the mainstream, because the mainstream is controlled by the people that are probably behind all of this. And it's way up. They're not telling you what's really important, but the biggest money in the world does not go to, buy 100 billion worth of gold that's come into this country and do it just for shits and giggles. They know something's coming because they're closest to the information. And if that is true, that 100 billion that we know of, well, it's a lot more if Vince is right, because it's not being reported. It's not coming into the COMEX. It's going directly into vaults, private vaults that have no reporting requirements to the IMF. And this happens. And I think he's probably right, for sure.